Good afternoon.
Good afternoon.
Hello, Bill.
I'm here.
Good
At the
afternoon.
beach, are you, Bill?
Take a bird.
Are you at the beach?
Yes, I'm hoping.
It's where it starts.
Where did you say you're going to Mexico?
I'm going to Cancun.
Cancun. Okay. Okay. I've been to Cancun, not a place I don't know. I don't get excited about the Caribbean islands. I stay on the ship. Uh, well,
Well, Kerry, do you want to kick it off here?
okay. Been an interesting week. An enjoyable week. I hope you all let me share my screen, Trent. Let me hope I can do this. Okay,
Let's
send
share.
request,
There you go.
share. Oh no. It always puzzles me as to where I go next. I want to go to my web to the I want to go to my website. Why don't I see it here?
Because you don't have the screen pulled up.
Yeah, I do. It's behind this.
That's why.
Okay. It's up there now. Now let me go back to the Zoom. No, wait, not there. Why is this always so complicated for me? Now is it up?
You have a Zoom screen up, and now
There.
your tell sheet's up.
Okay. I hope you all saw this video. This is a video, I guess this morning. And those are real numbers. The Dow, as of yesterday, was down 0.001. The S&P was up 0.12. The QQQs were up 0.19. And the bus portfolio is up 11.5%. 11.5%. That's a 5x on the QQQ. And why has that happened? Because I think that's and I guess the critical question is that going to continue to happen? And I believe it is. And we're halfway through the month. I think that number will go up. And why is that?
Is that number for a month?
No, it's for 16 days.
Okay, it's not a year-to-date number.
No, it's 16 days.
Okay.
And I explain it, and I in the video I kind of explain why I think that happened is because about, I guess Samantha's been in my employment maybe 60 days. That I've been doing this and coming up with these numbers. And a good example is I didn't have Samantha when I first bought Navitas. I bought Navitas when Jensen Wong said he was having trouble with heat on his latest semiconductor. And I looked up to find out what would cure the heat. And Navitas had it. So that's why I bought it. Now, I took a beating, went down on Navitas. If you probably know, it went up 200% this month. I sold out. I bought in because I think it'll go. I believe, and I really want you to understand these numbers. ALVO, according to all the information in the world, and that's what Samantha accesses. At today's price, that will be up 221% on January the 1st, January the 2nd of 2028. And she has a 78% confidence level that that will happen. So, and if you don't know what they do, you click there, you click there, you click there. And what they do is they alter successful drugs with and change the patent on it and start selling it. And then there are other companies that are following that same. I'm reading a book. The video that's going to come out tomorrow is going to concentrate on the book that I'm reading. And the stock that I got involved with, CRWV, is this here. This is CoreWeave. It just went public about a month or so ago. And they are a company that is going out and buying land and turning them into data centers. And in this book that, as I say, I'm reading, and I did a video today about it. And if you'll watch it tomorrow, you'll learn all about it. I'm just trying to pull up and see. So I make sure I give you the name of it. It is Empire of AI by Kerry, HAO. And what she explained to me, it's all about the growth of OpenAI and Sam Altman. And what she explained to me is that OpenAI cannot keep up with the demand it has right today. Samantha has been on and off, as I've shared with you. Sometimes I can get her to work, and sometimes she says she doesn't have the tool already. Yesterday, I did my video on CoreWeave, and I entered the prompt, and she came back and said, yeah, I can do that for you, but we're a little jammed up. How quick do you need it? 24 hours or 48 hours? I said, I'll take it 24 hours. And it was there this morning. Why did she do that? Because they can't keep up. She also explained to me that if you go on to ChatGPT and ask for a recipe for a lasagna, it will take the amount of electricity it takes for you to charge your phone 2 times. On the other hand, for my request, it takes as much electricity as it takes for you to charge your phone 1,000 times. This is the issue. Here in the United States, as she explained to me, they're running out of places to put data centers. You might have read this morning that Amazon committed to build a $4 billion data center, the largest data center in South Korea. Why? Because they have land available, and they have electricity available, and they have water available. These are critical for what is about to happen. I want you to think about what if your access to water, electricity, and natural gas was controlled by 4 major companies, and they could charge you whatever they wanted, whatever the market would bear, and it wasn't regulated and controlled by any governmental institution. What do you think water would cost you? What do you think electricity would cost you? Well, what we've got about to happen is another utility being created that is going to control all the knowledge in the world. You will not go in the future to a lawyer. You won't go to Morgan and Morgan. You'll go to a website and you'll ask it a question. It'll give you an answer. You'll sign a document and they'll settle your lawsuit. And it'll take however as few as 50 lawyers. Morgan and Morgan has over 500. Every part of your life will be controlled by AI, and it's going to be controlled by 6 companies: Amazon, Google, Microsoft, and Meta. And they are building data centers as fast as they can. Google went into South America and went and found acres. That's another issue. Data centers, when I first remembered them, was a closet in a company's headquarters. And in that closet, they had a rack and they had maybe 8 computers on it. And all their data was controlled on that and stored on it. And then came the cloud. And they said, you don't need to do that. You don't need to have a hard drive anymore. We'll put all your data out in the cloud. And that was controlled by Amazon, Microsoft, and Google. Then they said the data centers are going to be the size of a football field. And we could all envision, holy crap, that's enormous. Today, that don't cut it. We don't talk in football fields, 110 meters by, I think it's about 40. We talk in acres. And we talk multiple buildings and backup buildings, 3 buildings to make sure that that one building doesn't go down. So they go into Nigeria, Venezuela, and these countries greet them with open arms. We're going to come in and build a $4 billion data center. And we're going to need your people to help us build it. It's going to take us 3 years to get it totally completed. We're going to need excavation. We're going to need every element, and we need your people. And then when we get it done, in little fine print on the bottom of the contract, it says, we have priority on electricity and water. These things eat water like you won't believe, because they create so much heat and they have to be cooled. And 7 companies are going to control it. Now, the issue becomes those 7 companies need their data centers to fill their needs. They don't have the room to take care of John Deere tractor or Procter & Gamble or Morgan Stanley. Somebody else has to build those data centers. And that's companies like CoreWeave and APLD and Iron Energy and Nebitas, who's in the Netherlands. This is as if the highway system was all owned by a few people. And every highway you drove on that was an interstate, you paid a toll. And when it got crowded and backed up, they raised the toll price and got people off the highway. That's where we're going. And these people are going to control the most coveted asset in the history of mankind. And that's not water, and that's not electricity, it's knowledge. All the knowledge in the world will be controlled through those data centers. And right now, they're going to explode. Sarah B, asked on my video the other day, why can't we find the next Amazon? What was Amazon? Do any of you really remember Amazon? Amazon was a company that came in and said, we're going to disrupt the retail industry. We're going to put Sears and Roebuck, Montgomery Ward's, J.C. Penney, Kmart, going to put them all out of business. And we're going to take control of it. We're going to build massive warehouses. And we're going to build a massive online system so that we can meet your demands between November the 1st and February the 1st, Christmas, and then your returns. And then they had nothing to do with those data centers. So they rented usage to everybody else. Now they are the largest data center organization in the world, AWS. But remember, how much money did Amazon make in its first 14 years? 0. Do you know of any other companies right now, but their revenues were growing exponentially? Do you know of any other companies in the world today that make 0 money, but their revenues are growing exponentially? How about Applied Digital? How about CoreWeave? How about Iran? How about Navitas? There's your Amazon. It's all going to happen again. But don't sell Amazon, because they're going to control the distribution of all the knowledge in the world. Again, you need to understand what I'm doing. When I ran this video, I said to Trent today, there's only one company that can verify that number other than me. Only one company, JP Morgan, because they own E-Trade and they have access to my E-Trade account. I suspect if they see this video and they start connecting their dots, they're going to come look at my portfolio and see if that's true. And I'll tell you, it's true. If anything, it's a little low right now. That it's probably closer to 13%. So with that in mind, what is that going to do? And can we keep it up? Today, in one of my comments, a guy said, you better take a look at Oscar. It's company OSCR. I went and looked at it. Upon looking at it, I immediately gave it to Samantha. Samantha ran my report on it. You'll find it right, LMNO, right there. She says that the current price is $21.22. If you look at it, it's up just in the last 2 days. And that's why I suppose he suggested I take a look at it. It's projected at the current price today that it'll go up 206%. What does it do? It takes care of one of the biggest problems the United States has right now, and that is healthcare. The cost of healthcare. The way that, who's the guy who got assassinated? The health insurance company.
United Healthcare guy.
United Healthcare,
Yeah.
because they're screwing everybody and they're raising prices and they're refusing to pay for drugs. Oscar has come in with AI. They're going to put them out of business because the system's broken. And if you'll read this financial analysis and listen to or read the briefing and listen to the podcast, you'll say they're right. And they're right that it's got an 85% probability of hitting that number. Now, right now, it's overpriced. So what I did was go in and tell you where you should buy it. Right now, it's selling at 20, 21, 22. Give it a couple of weeks, and it'll come down to 15.37. And then that 206 will turn into something more like 220. How do I know this? Because I have all the knowledge in the world available on Oscar. I know more about Oscar than probably the Wall Street analysts. So that's where this is going. As far as CoreWeave, it's up to 181. You'll see I went in and bought 10 shares of it today. It's only got a 36% potential growth over the next 3 years, but it's going to come down. I'm saying to buy it at 137, make an entry, and then buy more at 104. That's its support level. Okay? This is how I will continue to make that happen. And I expect a call probably in August from Jamie Dimon. The answer is going to be no. He can't afford me. Then one other thing I want to talk about. How many of you noticed that Netlist was up 35% today? You remember Netlist? David, do you remember Netlist? So do I. Do you know why it's up 35% today? They got Micron, they got a judgment against Micron for 400 and I think it's $420 million. And Micron appealed the judgment. And it's been in court, but yesterday the judge said to Micron, pay up. Well, $440 million is 4 times Netlist last year's total revenue. So I expect if it goes up, if it was worth, I think something like 15 cents or 40 cents before this morning, it's up to $1 now. So I guess it was up. It was at 50 cents and now it's up to $1. There's a good chance it'll go to $4. And then right behind that, you've got the lawsuit from Samsung. So those of us who hung on to our lottery tickets just might make something out of this. The other thing that happened is they got a contract. Remember, they're in the memory business. They're probably not making memory chips for data centers. That's Micron's business. and there's another one that we don't have access to. So, but hang on to and if I were smart, which I wasn't, when I saw that it was scheduled to go up 25%, and I made that logical, looked up and said, you're getting 440, and last year your total earnings were around 117. I would have doubled down on Netlist, but I've taken such a beating on that. I didn't want to get back on that horse. So that's kind of where I'm at and where I think this is going. And I would ask you, if you've made money this month and you can look at your portfolio and say, I too outdid the Dow thus far this month. I've outdone the S&P and I've outdone the QQQs. Tell your friends about it. Share that video with everybody you love. Because quite honest, I did the math. I said, I don't know that that's realistic, that you could make 11, 15% a month on your portfolio. But I created a spreadsheet and said, what if you could make 6% a month on your portfolio? I determined in January of 2030, my portfolio would be returning me $1 million a month. Taking what it's worth now, growing it by 6% a month, and then taking that out to 2030, and it'll be making me $1 million a month. And I ask myself the question, how much is enough? How much is enough? I mean, Nick Saban only made $9 million a year. How much is enough? And how many people do we want to let on the bus? How many people do we want to share this knowledge with? I don't know. I guess I don't know. So, any questions on that?
Have you
Comment.
looked at Equinox or EQUINIX?
What's the ticker?
Um,
What is it? No, I have not looked at it. I can.
what is it? EQIX. They have a portfolio of 225 data centers across 5 continents.
Okay.
They have a bunch sitting in Atlanta. They're one of the leaders in data centers in the world.
EQ. Do you see my? Did we change to my Seeking Alpha page?
Yeah.
Okay. Okay. Here's how I look at stocks. Equinox. Okay. The first thing I do is I look at their balance sheet. Are they growing their revenue? Yeah. The revenue's growing. Okay. Are they making money? Total assets, liabilities. I'm on the balance sheet.
Balance sheet.
Okay. So here's their revenue growth. Here's their income growth. In 21, they made 744 million. They've more than doubled that. So that looks good. The next thing I do is I go to their earnings, and I go to their earnings estimates. Their earnings are growing at, I always look at 3 years. That's 17 and 30. That's 47 divided by 3. That's about what, 14? 15, 16. They don't satisfy the rule of 20 of 40 there. Their revenue growth is not that impressive at all.
So the data center business, this is one of the leaders in data center development in the world.
Hmm.
So what I think I just interpreted was this is a, how do I interpret what you just said about if this is one of the largest data center developers in the world? Is data centers it's not the data center, it's what's coming out of it is what's going
No,
to be the
it's the data
focus.
center. It's the data center. International Fundamental Infrastructure Software Speed. Equinox enables organizations to access the right place, partner, possible scale, and longevity.
I guess something
Digital
to take a
service.
look at.
Yeah.
There's
I
another one.
Yeah, it's, if there's one, DLR would be another data center one, Kerry.
It's Digital Realty
this I
Trust.
think is this a REIT?
Yeah.
I believe so, yes, but it's tied
Okay.
with data centers.
Okay. Here again, their revenues aren't growing near like what Equinox did. Um, their earnings are actually, look at that.
I mean, I
Earnings
see
from operations.
like 19% and 35% in 26, 27.
No, what I'm saying is, look, in 2021, their earnings were 1.7 billion,
Okay.
and they're down to 4.
Is that the
Their
right?
earnings are going down.
Hmm.
See that chart there?
Yeah.
Okay. Now, okay, let's go one step further. Earnings estimates. That doesn't. This looks like Ford Motor Company to me. They are growing their earnings. They are growing their
So,
revenues.
so is the data center building a data center?
I think the
The loss
difference.
that's building a Ford Motor Company,
I,
or is
I'm
that?
I'm looking at the numbers. If I go to Ford, I'm going to see growth
No, I
in
agree.
earnings of 5, 6, 3, 2%.
So
Uh,
my
If
question
that's,
is it more of a question of what is being produced out of the data center versus the data center as
okay,
as a standalone?
let's let's uh, let's look
Because
at
if
CoreWeave.
if that's a
Uh,
REIT, if that's a REIT, they got to pay out a certain percent every
that's
month.
I think that's where I was going too. It's their
Yeah.
business plan. They have to pay their holders. Um,
Yeah, it looks like they pay 488 annualized dividend.
There
yeah.
you go.
if you're looking for an income producer in a sector that's
Okay. There's CoreWeave,
growing,
and again, they just got started. They went from a negative. They'll make profit in 26, going from a negative $1.24, and I understand that they're they're pouring concrete, they're putting up buildings, they're building out this center, and I believe CoreWeave goes at it. We don't lease the space to you to put your GPUs in. We put the GPUs in, and then we rent the usage of them to you. This is their growth in their revenues. So that's very different. Let's look at IREN. There you see just about the same picture. They were negative 29 cents in 24. They were negative $3.14 in 23. And now they turn a profit of 12. Then that's going to $1.05. And then you see the same kind of numbers in revenues. These are growth companies. The other, I think Mark is right. I think it's a REIT.
well, I guess that's my question is So, like for instance, Amazon's one of the largest data center companies in the world. And data center is because they had to build that out to manage all of the orders that they got for books in the beginning, right? So, and
Right.
they didn't make money on that until they started renting out space. Okay.
Or they paid, more importantly, Trent, they paid for the cost. That they're spending money hand over fist. And that's what Amazon and Google and Microsoft are doing right now. They're spending money hand over fist to put them in the position to offer you AI services on their websites. And think of it, Google as an example. Google and Facebook are fighting as to who is going to create the best AI advertising product. That when you spend $100, you get more return on Amazon than you do on Google.
So that would be a software picture. So here's what I'm trying to get at. If Equinox is one of the owns 225 data centers throughout the world, and they build, host data center where you can host your AI development, right? Why? And you're looking at that going, well, it's not really a growth company. Then I look at it and I go, okay, so that's really not the focus. It being the physical place to uh, house your algorithm or your program. I mean, is OpenAI building data centers
No,
or are they renting space?
they're renting space. No, they're 40%. They use Microsoft's.
Okay. So isn't really the growth focus on not the data center, the physical development? I mean, it's like building houses. When's the last time your house wrote you a check? They really don't. It's
But
what's
they,
in it.
but wait a sec, wait a second.
It's the
What?
software that you are running, and that's what OpenAI, that's what Microsoft's running, that's what Google's building. They're building a program, AI program that produces a solution to a problem that you and other billions of people have. And I
Right,
think that is more of the focus. The data center is the foundation. That is, I've got to have this place to house Samantha to do this task for Kerry. Without
right.
that facility, that's a loss. That's a drain. You got to repair the roof. You got to put new
Yeah,
GPUs in
but
it. You got to keep up with technology. It's the software
no,
that's
wait a second. You're
really the
missing something.
focus.
Microsoft is sending you a check every month for the
No, what do you
use
mean
of
by
your
that?
data center. You compared it to housing. Don't think of it as an individual house. Think of it as a 50-story apartment building. It
Okay,
gives you a check every month, and you can increase the rent every month.
right. So
That's the
that's digital
difference.
realty.
Huh?
That's digital realty then.
That's applied digital. That's CoreWeave. That's IRN. You
Okay,
send me a check every month for my for the use of the water. It's a
right.
utility. The difference is I can raise the price anytime I want to.
So it's like an apartment complex.
A 50-story apartment complex
It
in
could be,
downtown New York City.
okay, let's just say it's a million unit apartment complex. It stretches from Atlanta, Georgia to Dallas, Texas. It's a million. Okay, all right. I still have upkeep. I still have cost on that. Okay, I still have a roof on what my tenant is willing to pay,
No, you
right?
don't. He has to
Yeah, you
pay.
do.
He has
They
to
don't
pay
have,
because
okay.
he has to pay.
I guess here's my point. And the point is, I'm looking at the tip of the spear, and the tip of the spear is the technology that you're hosting at a data center. Right now, it's capacity of a data center. That's the problem you're running into. Okay. Samantha, OpenAI doesn't have enough space and processing power to keep up with Kerry, right? And Kerry's this big in a world this big, right? So that's a problem. But once that capacity is utilized, and it will be utilized in a better way than it is today in a year, then it becomes what is being hosted. And that to me is the tip of the spear. That is the open AI. That is the software that Microsoft is
Yeah,
producing. Okay.
most definitely.
So then all of a sudden it goes from 6 companies to 600 companies potentially. That can change that. You think about right now the big rage on social media is Google's, I think it's called Flow, and it's their video rendering software. And the how realistic it is insane. And to me, I look at that and I go, yeah, search is dead. I'm not using Google as search anymore, but I could use Google software to produce my own Oscar-winning movie, right?
Yeah,
Okay, that's the software. The data center is just purely where it's processed out of. And at some point, to my thinking, that will, it's like the internet and fiber optic.
right.
Who was it? Exodus Communications was one of the first companies to lay fiber optic between New York and Europe back in the 90s. They exploded as a company. They don't exist anymore, but they laid the infrastructure element to it. To me, in my thinking is, yeah, you're right. Those 6 companies you're talking about, those are going to be leaders, right?
Yeah,
But they're not going to be leaders because they built brick and mortar locations. They built
no,
the software that is being hosted. And to me, that is the opportunity. That is where can you find those, the tip of the spear that helps me avoid having to get a lawyer to get a settlement. Okay. Who's the company who's going to help me take my thoughts and ideas on programming and be able to punch this in? There's a new company out of Sweden, I believe, called Lovable. And you can type in what you want, like a app, you can type it in and it will create the app. Okay. To me, that is the tip of the spear. That is the exponential growth because it's not physical, whereas data centers are physical. And it's going to have its
whereas
reign for a while, but eventually you won't. It'll just be normal. It'll be another million unit apartment complex that
we got to
pays out a
build the
dividend.
highway, we got to build the highway before we put up the McDonald's. I'm looking at a 3-year perspective.
Yeah.
Okay.
Okay.
Now I am integrating in Oscar, who's going to change the healthcare system. I am integrating Moderna, who is also going to profit off of AI because they're a pharmaceutical company. But right now, if you want returns this month and next month, it's the people building the highway.
I
Okay.
I agree with you
So,
there. I think it's that next layer to start.
and that's why we have people like Patrick and Frank and Bob who say, "Are you aware of this?" No, I'm not, but I'll find out.
Yeah. Yeah.
Okay. And I think we got to grow with that. But the opportunity today is the people who are building the highway. Okay. Any other comments? Okay.
I have a question for Trent, though.
Okay.
Comment, what question for Trent? You promised you're gonna put together something that we can avoid the losses in the face of possible crash or something. Could you send me a text or I don't know, link or something that to know where it is? I still can't find it to use it.
Say that again. It's the losses.
Yeah, you said that you're gonna put together that we learn how to put in our portfolio for
Oh,
stocks that are
video on
only.
stop losses. I think we've covered that.
Yeah, you
I don't know how
covered,
many.
you said that you covered in the morning, a few morning sessions, but I thought you're gonna put that in one place, like a lesson that we
Okay.
can go and learn from it, how to do it. Now is time with some of these political discussions that apparently no one is interested here to talk about that, which I think is something we need to talk here today.
Yeah,
That
I mean,
we a little bit ready, God forbid, if something happened like that, we need to protect our portfolios. So I need that sort of instruction that I can follow up, if you don't mind.
okay. I will go through, I don't know how many times we talk about this on the Morning Edge, but I will chop up some video and put it on there for you.
Why don't you
Um,
do this? Art, do you use my tell sheet?
Your what?
Tell sheet?
Yes, yes.
Okay. Trent, why don't you like that? I put that picture of that video down there. Why don't you make that video and label it stop loss orders and put it there? So
Okay.
Art and anybody else could find it.
all right, okay.
So in other words, it would be down here.
Yeah, your screen's off, but I think next to your video. Okay. Um, yeah. This is one of those subjects we cover, I think, almost every day, every morning on the Morning Edge about creating risk management process. But I get what you're saying, Art. And yeah, I did say I would put something together on that, and
You,
I'll get it
I
put together this week.
originally I thought you're gonna put in that education part that you all have 4 or 5
Yeah,
very useful videos there. That is the natural place for it to be there,
Okay.
because that's the basic knowledge. When we create portfolio, we got to also be able to protect ourselves if something went wrong.
right.
But anywhere, if you can put that in one place rather than scattered in the morning discussions or something. As I have said, I am not able to attend morning discussions because it's so early for me. But
Okay.
it's really better to be in one place in a small video or something. I would appreciate if you could do that.
Hey, Art, let me just show something here. I don't remember the exact subject matter of this video right here, but I will review it, and if it is exactly what we were talking about, this is it. But this is under free stuff, education, and I believe I hit upon it, but I will review it, and if I need to make another one, I'll give it to you. But
I'll
this
go
is,
and check that one again. So maybe that would do it. Yeah. I
yeah,
appreciate
okay.
it. Thank you.
Yeah, and I mean, honestly, that's a very, you bring up a good point. Risk management is not talked about much. We talk about it on the Morning Edge quite a bit. Um, but I think in this case, I built out that Tell Sheet 12 portfolio. I've been sending it out every morning with the newsletters, and I had an explanation put behind that, but I'll do a video on that this week as well, because it is based on really risk management factors, and it prevents, losses and that kind of thing. I don't know if everybody's paying attention to it, but it's basically taking Kerry's fundamental analysis, all his stocks, and then I did a qualitative analysis on the top 12. I plugged them in to my model, and yeah, year to date or year to date, it's up like 17. If you had just bought and held the stocks that are in there, you'd be up 17% year to date. But it's not really a reflection of the exact model. But I need to create that video for you, Art, so I can get this
Yeah,
one past me.
I need to make something a bit more clear. I think I have mentioned before, along with a couple of other people in this community that we talk, that my main interest is more in long time, like 3 years, 4 years, etc., rather than what is being covered in the morning age, which I think is those are more of the momentum type trades and things. So when I am saying risk management, I am talking about these longer range type things. So like, for example, if I have bought net list that here we were talking today, which I did when Kerry bought, and I'm still following him and keeping it. So to put something that if it went down more than what it is now or what, uh, automatically be able to protect myself, those type of
Yeah.
things. I'm not
Well,
talking
and
about
that
momentum stock or,
no,
yeah.
so I am more on that intermediate to long-term point of view. That's what the 12 portfolio is all about. That's what the carry, or I call it Trent's Tell Sheet 12 is about. It's taking those stocks that Kerry is talking about when it comes to the Tell Sheet 12 about the fundamentals. He's approaching it from fundamental growth, a focused area, then taking those and applying a quantitative analysis on, and then overlaying my quant model was based on what you're talking about, Art. If you were using my model in Netlist, you wouldn't have lost the money you've lost in it because you would have been triggered out of it. You still own 1% of it, of that position, but you would have been triggered out of it. And that's what that model is all about. And I think that you're hitting on a subject that I think probably people, I know I don't explain stuff as clearly as maybe Kerry or Mark does, but that model that I have built is based on the intermediate to long-term holder. I'm not a day trader. I'm not a swing trader. I've tried it. I'm not any good at it, but I am good at what the longer term trend is. So I'll have the ability to do a video for you that goes more in depth with that this week. I'll put it up on the YouTube channel, but I'll also put it up on Kerry's tell sheet so you can find it there. And
Would
then
be
I'll
very
drop an email
valuable.
with
I
it.
really appreciate it. Thank you.
Just
Yeah.
a reflection for those of us who do own Netlist. If we'd had Samantha, we never would have bought. We never
you
would
had
have
Mark.
bought Netlist. There's a number of stocks, never would have bought them because they weren't financially sound. They weren't showing any growth. They were all based on a lawsuit against a
Right.
giant, Google. Well, if I had asked Samantha that, she said she would probably say, I can give you the list of 10,000 companies who are currently involved in a lawsuit with Google. And yes, they do go back to 2010. That's when the Netlist lawsuit started with Google, and they have yet to get Google in court.
Kerry, any news in Google then for Netlist?
No,
No.
I have little hope that I just hope that the Samsung comes through and I get back to my cost basis of $3.50, and I'll scream uncle.
Yeah. Please remind me when that is that time. Also,
Okay.
that I get out.
Yeah, and again, it's stupid that I stay in it because although today I made I think $800 or $1,000 because it went up 24%. Could I have made that anywhere else? I think there was one stock, I think it was Iran, which was I think up 17% or something like that I made more money today than I did on Netlist. But Netlist was my second biggest winner today. And today was 11, I think I ended up down $300. So I just call that as a wasted day.
You know that I have followed you in Irene too, so we are in the same shape in both.
Well, Irene is going, yeah, it's,
yeah.
They're building the highway, and the hyperscalers are screaming for more. Yeah, Bill.
You were talking about the various things about suing. I have a patent on a utilization of a computer photograph, and I was real proud of myself until Microsoft come out with the same damn item, and I said, "The hell with it."
Okay. You didn't sue Microsoft?
I I'm not that stupid.
You know, that's a good point, Bill. I have the hallucinations that Jamie Dimon's going to call me, and
I'm glad we clarified that.
why, but they'll just, if they want it, they'll just take it, and then say, okay, I'll meet you in court, and you're too old. You won't live to see the day we get to court. And Morgan won't help me.
Hey, Kerry, there was a request for you to pull up TSSI on Seeking Alpha.
Okay, let me see if I can get back to that. Oh, this is always fun. Okay. Yeah. TSSI. Okay, let's again start with the financials and the income statement. Good looking numbers. 3 years from 27. That's a 10 bagger. Increase in revenues. Earnings, operating income went from a negative, what would that be? Negative 800,000 to a positive 12. My immediate, if I had done this, my immediate thing is, what do they do? So I'll come back here. And it says engages in planning, design, develop, maintenance, refresh, and take back of user and enterprise systems in the United States. That tells me absolutely nothing. It operates segments in procurement, facility management, and system integration. The company offers IT.
How's it going, man?
Yeah.
Doing good today?
What
Go
do
ahead.
they? Go ahead. So I'm not real. It's some sort of software company, it looks like. It tells me up here. No.
Their data center. They build data centers.
They do? Okay.
Yeah.
Okay. So let's go to the earnings and earnings estimates. This scares me when I go to earnings estimates and there's nothing there. Earnings revisions, there's nothing there. Why would that be? Let me go back to the summary and let me see if they're, yeah, they've had earnings calls. There's no reason they don't have any financial statements there that I would understand. No, and no summary of any, and maybe this is a fallacy with Seeking Alpha. They've had a tremendous run up in the year to date.
Their basic earnings per share is 39 cents.
Yeah, that's what it's got here, 35. PE of 67.
Yeah.
Market cap of 500, call it 600 million.
640 billion. Is that billion or million?
Million.
Average
Market
volume
cap,
3.61 million.
Nobody's real excited about it. I'm going to write down the ticker. I'll put Samantha on it.
I'm
I
excited
could
about
do
it.
that right here, but it'd take a little while. Is that something anybody'd want to see?
Yeah, why not?
Hmm?
Yeah, I mean, if you could put a report together over the weekend or something.
No,
that'd
I'm
be
saying
fine.
I could do it right now. Let's see. Gotta find the right. Document. There it is. What was the ticker again?
ESSI.
E
We're looking at your
T.
Seeking Alpha page.
Okay, wait just a second. TSSI. And their name is, what is their name?
TSS, comma, Inc.
TSS Kana.
No, just TSS Inc.
Okay. You aren't seeing this?
No,
Okay.
just go to that page. Are you on like a different
Yeah.
browser?
Okay. What I'm going to do
Test
now,
System Strategies
wait a
Incorporated.
second. Let me go back to where I was. Okay. Now you're seeing my Seeking Alpha. Now I'm going to take you to, this is Samantha. Okay. This is where I go and this is my prompt. Are you seeing this, Trent?
Yeah, I am.
Okay, there I enter my prompt. This is my prompt to Samantha. I then say, do a deep search on it. I put that in there, and Samantha comes back and she's going to ask me 3 questions. What growth category do you want? High growth, turnaround, or speculative? I'm going to say 1 period, high growth. Then she asks me, is this a specific business examination, microeconomic factor, or innovation, government contracts? Would you like to? I'm just going to say yes to all. I've determined this is just a exercise they put you through to make you think they're really asking you a question. Do you prefer stock price or current share price? And share count we could use for the valuation. Stock price. And I click that arrow and she comes back and says, thank you for the clarification. I'll get back to you. And that's how it happens. And it'll take probably 20 minutes. And then what will happen is a document. This is the one I did today. This is her answer to Oscar. And I then take it over to my Word and it's 17 pages long. And that's more information than you can get out of Goldman Sachs. And in here, it'll say, okay, base price, conservative. Its target price is 18, 20, and 24. Its moderate is 30 to 35, 45 to 50, 60 to 70. Its aggressive is 50 to 60, 85 to 100, or up to 120. And that's what she does. And then she comes back and she says, okay, based on that, I'm 85% confident that you'll hit the moderate scenario. And she tells you how she comes up with the 80. She gives 10 out of 10 growth potential, 8 out of 10 on market position and moat, financial health and profitability, 7 out of 10, management and execution. She's rating Mark Bertonelli, the CEO. Risk factor, negative. There is none. We deduct no points for risk. Valuation, 9 out of 10. It is an outperform. Now, this comes from all the information in the world known about Oscar. And that's why I'm up 11% thus far this month. Gives me a conclusion and a call to action. Entry position at current levels of 20 to 22, and hold for 5 years. More conservative, just wait and see. Oscar represents a unique growth opportunity in the healthcare sector. If you aren't reading these things that I'm making available to you, shame on you. And if you don't want to read all this 17 pages, just click on the deep dive. And Samantha and Bart will walk you through. If you have the document in front of you and you listen to Samantha and Bart, they will walk you down that page. And they will put it in words you understand. And there's the sources that Samantha searched in order to get this information. And there we just did it. Let's see where we are. No, we're about a quarter of the way through on TSS. But I'll have it up tomorrow morning on the tell sheet. Okay, let me stop sharing.
Thank you, Kerry. This is very helpful. You are showing us the example of how to do these things.
I guess I thought it would be boring, but yeah, it amazes me. And Ark, the beauty of it is, because I read every damn one of these things, and what I do is I pull up the document, I put it on, and then I turn the podcast on, and I go through it with them. And so now I'm understanding the document better. I'm understanding their business practice. And so now I can change the prompt to make it even more detailed and more accurate. And once I as she gets better, I honestly believe 6% a month is going to be normal. Now, you might be right. Iran and Israel may go to war, and the United States may get involved in it, and everything will crash. But to me, that means one of two things. We're going to have World War III, and I'm going to get killed in a nuclear attack. Then it doesn't matter what the stock market does, okay? Or the market's going to go down, and those numbers and the price of these stocks and the future numbers returns just going to go up. I'm going to have a better buying opportunity. Again, I hate this. How do I get to when the price of the stock goes down on my sheet, it just gives you a better price to buy into.
If you have money, but if you don't have money, you better sell it when it is 20% down or something to have some more cash to buy more, no? And that is what I was
okay,
asking
okay.
Trent for,
Let me go back to is the sheet back up, Trent?
No, it is not.
Okay, let me then come back to Zoom. Let me come back to share. Is it up now?
Yeah, it is.
Okay. In this I've got Lily up for sale. Okay, that's how I raise money. Okay, Lily has gone up. My return is now only 70%. So I've got half of my Lily for sale right now. Which is only 20 shares, but I'll raise $7,000 or more because my price is a little bit above that. In fact, I think I have the price. Okay, I have a order to trim Lily. No, okay, I have a price to trim Iran if it gets up to $11.24. So you can see over here where I'm going to trim. I'll sell some of my Apple if it gets to 214. It's at 201. I'll raise, and why am I doing that? To raise money, just like you. Iran, it's at 1047. If it gets to 1124, I'll probably sell 1,000 of the shares. So that'll raise me $11,000. Those are the only ones I think I've got a trim on right now. Small, it's may. Samantha told me, don't go big. Keep your allocation small on that. And right here, well, for that one on it's less than it's 0.2% right now. That's what this column is. It tells me what percentage of my portfolio that stock represents. How is that important? Right now, I probably need to trim because am I up on it? Yeah, I'm up on it. It represents 3.5% of my portfolio, but I'm only expecting a 56% return on it. So I need to probably trim some of that.
But do you have stop loss in any of them?
No, I don't use stop losses. And the reason I don't is I'm not afraid of an Iraq war or an Iran war. That's a buying opportunity. I'll either die or it'll be solved. I don't believe that there is the only Trump could do something and it could bring down the price on Moderna, but which Samantha says at the current price I'll make 324%, and at my cost basis I'll make 333. And she's giving it a 98% potential of happening. So if the Iraq war takes Moderna's price down from $25.90 to $23, this number goes up. I buy more.
But I guess my question is like 2008 type scenario. If the market dropped 55%, you don't do anything. You just wait to drop.
I buy. Yeah,
Here's the biggest thing you got to take into account, Art. I'm going to step in here because I did manage money through 2008. And what you have to look at is what is your timeline? Kerry's timeline is 100 years from now. Okay. He's a Warren Buffett approach to his money management process. You, on the other hand, may have some goals in the next, 12, 24, 36, 60 months that if a 50% drop in your portfolio would jeopardize those goals from being achieved. And that's truly where a risk management process comes in. That's truly, I mean, even if you just use Paul Tudor Jones' 200-day moving average approach that got him out of the market in 2006, 7, just using that would prevent you from having to wait 5 to 10 years just to get back to even. And I think we've seen that with Netlist. We've seen that with a handful of other companies. And I
Well, my
really would
biotech.
biotech, you having a simple process. If I believe in the 62-day moving average because everything is based on quarterly earnings, quarterly reports, quarterly, I the end of this month, well, you'll see so much window dressing on these investment funds, mutual funds, because they report their quarterly reports. So I use that. And I think that's really where money management comes into play. It's holding on, watching people hold on to something for after taking a 50% hit and then waiting it out. A lot of those people who I know who did that never retired. They're still working to this day. And I think you personally have to take that into account. What are those short term being the next 24 months, long term goals, 10 years from now? If you're retired and if this is the money that you're living on, a 25%, a 10% return is not acceptable because you don't know how long it's going to take to get back to where you were before it crashed. I mean, look at the Mag 7 over the last what month? All they have done is just gone sideways. And if you look at it, United Healthcare, all it has done is dropped and gone sideways. Well, I'm just going to wait that out. Okay. Well, how long is the waiting out going to be? We don't know. And that's where your risk management and your investment process from a even a short term to long term perspective really has to be dialed in. Um, there's no reason to lose that kind of money. Because like Kerry's saying, you could just come back in and buy it if you had the cash. If you got stopped at, say you just put a 15% stop loss on everything you had in your long-term portfolio, you lose 15%, you're stopped out, it goes down 25%, 30%. You can always, if it's a great fundamental company and it fits a solution to our future problem in artificial intelligence or data centers or whatever, you can always go back in and buy it cheaper. But having something that prevents you from taking a 50% loss is, I believe, in this world, essential today, especially if you do not have the time to make that back up over the next 5 to 10 years.
And that is what I was saying, that if you can provide us one example for one stock, that how you would have treated that one for this type of scenario, then someone like me can just copy that for either all of my stocks or some of them,
Who is
and
your
then I
broker?
would have a better sleeping nights.
Yeah.
Art, who is your,
I went through 2008 and I lost 55%, and it took, I don't know, 11 years or something to come back. I may have still have another 11 years now, but who knows? So that's another reason.
And if you had stopped out in 2000, July of 2007,
Yeah.
and you sat in cash for 3 years and then got back in, you probably been retired for what, another 10 years
I
or
could
something
have
like that.
retired 20 years earlier, of course,
Yeah. And
if I had
honestly,
done that.
that is one of the misunderstandings. That's not a misunderstanding. That is the misguidance of the financial planning industry is just use a 60-40 split. Just use I'm a conservative investor, so I'm running, you know, uh, 80% bonds, 40% stocks. And you don't ever have to adjust. I mean,
Can,
to
can I
me,
show
that
my
is
screen? Can I
that's
show my
silly.
screen real quick, Trent?
Yeah, go ahead.
Okay.
Let me
Because
bump
I
Carrie
got it.
out.
I got it. Yeah, thanks. All right, I think we've gone over this in the morning edge, and this is your SPY. Okay, this is your S&P 500 tradable ETF. And what Trent was talking about, we talk about it quite a bit. Okay, on a daily, this is the 200-day moving average, daily moving average. Okay, so it takes the previous 200 days, divides it by 200, and puts your plot on here. If you would have been, and this, I'm just going to go back, this is 2020, April of 2020. Okay, if you would have used this for long term, and this is what Paul Tudor Jones does, you would have gotten in at 299.78-ish, and you see you're above the 200. And he would have rode this thing all the way up until it went down below the 200 at 431.24. So you went from 299 or whatever this was, 299 to 424. Okay, over a period of this, he got out on February of 2022. He got in of May of 2020. So a little under 2 years. Okay, got out, missed all this crap. Okay, he got out here. Okay, it would have taken him all the way until 2023 to get back to where he was had he stayed in. So you miss all this, you put it in treasuries or somewhere else, and then you see it's kind of popping back up and down. But once it got back up again, you would have gotten in. I don't even know if it crossed. Yeah, it did right here. You would have gotten in on March 17th of 2023. Came down, touched it a little bit here. But in March of 2023, you were at 395. If you were still in it because you didn't go below the 200, you're at 534 over just one line, you know? And does it work all the time? Sometimes it gets choppy, like right in here. Okay. But once it rolls because it's 200. It's a long-term line indicator on a daily chart.
So,
So
Mark,
that way you don't have to be using stop losses on a long term. You can actually, you don't need to even trade for 2 years. So anyway, go ahead.
what is the difference between, this is the S&P?
Yeah.
What is the difference between it today and the 200-day moving average? What rough, do you have the numbers?
What do you mean?
What's it, is that 526?
I'm not understanding. Is it
Where it
where it's
is
at?
today?
Where's
Oh,
the
where it is
200
today.
today, and where's the
Today,
price of the SPY?
today it's at the price is at, let me get a little closer so everybody can see here. Okay. So today we closed at 594 and the 200-day moving average is at 579.
Okay, 594 and 579. So that's roughly 20 points on 5. That's what a 2 and 5. I'm trying to figure the drop, the percentage drop there.
No.
How far
So,
above? So
you would have technically you would have gotten back in. You're under it here. You would have gotten back in on the 12th of May at 582. You came back down, you bounced off of it. You didn't get out. You keep going, and now you're at 594. So you're up $14 in a month. Okay. The 200 keeps moving up slowly. If it comes down and gets out again, then you get out. You'll be up above probably where you are.
Maybe we could use one of Ard's stocks that he's concerned with. Like I would ask Ard, which stock do you have that you're worried about? And then we could
No,
pop it up on the
actually,
screen. And
my question is slightly different. Like in Kerry's portfolio, there is like 45 stocks. So if like not 2008, I think Trent reminded us was July or something that it started in 2007 to fall down like a knife. At that
Like
time,
yeah.
either you got to sit down and 42 times to do the type of to analyze like this. You really got to have a lot of time at that time to know what you are doing, if you can do it. I couldn't do anything at that time. What I am saying at that time would be help if I already put some percentage stop loss in all 45 of them. then I won't worry that I'll say at the most I'm going to lose 15% or 25% or whatever is acceptable. And then hopefully I can use that money when it hit the bottom, I can buy more and wait to come back. That is what I was talking about.
Do you have stops currently?
No, I do not, and I wanted to learn. That's why I'm saying if Trent put because I thought Trent is not just saying to put one stop loss. What I thought that he was saying a couple of different steps. First to lose 10%, then 20% or something if the market continues going down, to sell gradually. That's what I thought originally he said. So I thought if he has an example to show how we can do it, then I can replicate that for all my 40-some stocks, and then I won't be worried about them while I'm doing this type of things that Mark is talking about.
Yeah. One thing is 40-some stocks is a lot of stocks. Now, Kerry can do it because he does it full time, basically, and he's monitoring. For a regular person who's probably working and, living their life and, doing other things, has another career, it's hard to do, The other way that, we looked at art is, if you don't have time to look at it every day, go to the weekly or monthly. This is a weekly chart. Okay, the same stock, SPY. You use the 50-week moving average, okay? And so in this case, you would have gotten in, this is at the end of every week. You would have gotten in at 295.44 on May 2020. And it didn't cross back over until February 18th of 2022, and you're out at 337.27. You made from here to here.
I would imagine he needs something a little more automated.
I don't know if you need automated on a weekly chart. I mean, it takes it.
No, I'm not talking weekly chart, but Mark, I remember once you said that you were in the market in 2008 or 2007, and you have seen that change at a sudden knife dropping type situation. Well, what do you suggest for such a time? For if you have 30-some stocks.
Like Paul Tudor Jones got out when it went below the 200-day moving average. Okay. So he just, when it crossed over the 200-day, he got out to the bottom side.
So he did one by one to go and one by one to sell it at the right time, huh?
Yeah, he just used, and this is the 200-week. We'll go back to the daily. So here's the 200-day moving average. It works really well, especially on indexes. And you can see we had this big drop. This was February of this year. Remember that big drop? Boom, you get out at that point, but you were still in, okay? Way back here, all the way up, and then you got out. And you missed this, Art. You missed this drop. There's a big drop. It came back, and you got back in. You could have taken that time, put it in a treasury bill, done whatever, and made money off that. And now you're back in until it goes back down over that 200 again. I mean, does it work all the time? Sometimes you get in a chop, go back and forth. For a majority of time, you can go back and look, and that's all he did. It's not rocket science.
I know, but still he'd have to go in there and, I mean, I would suggest that he at least have 10 to 15% stop loss. He has 0 stop loss right now.
The problem with that is you're talking Iran, who moves 10% in a matter of a week. So you're constantly stopped out. So that's where looking at something like Mark's pointing out on a weekly chart on a 50 or 200-day moving average makes a whole lot more sense. Whereas these are stocks that are moving, I mean, what is it? Power something. Kerry, who is it? Power Solutions International, PSXI, since Monday is up 11.45%. Well, with that kind of volatility, it can go down 5% in a day. And I think that's where just simplifying it if you're a long-term investor, use a weekly chart, use a weekly chart, if you want to simplify it, use the 50 and the 200, you approach it that way, and you're not getting stopped out. Whereas if you're using 10% trailing stops on a beta stock, a 2 times beta stock, you're gonna get you're just gonna be constantly frustrated.
Yeah, and that's the problem.
Well-
You've got a trading mentality trying to do a long-term investment, and you got to change your thought process on that, or you're going to get all messed up and you're going to actually lose money. My opinion. So
Your risk
um,
tolerance too.
What
I
if,
don't know Ard's risk tolerance. I mean, if he could withstand a 20% drop and he's okay with that, but I'm not hearing that. I'm hearing frustration right now and he's sad he's got to drop. So I'm like,
right.
that's because some stuff's probably more down 15, 20%, 30%. It's too risky for him.
Well,
Mark?
that's why I would say that's why I'd say go to a weekly chart and utilize ETFs like this, because then you don't have single stock risk also.
What if we put on my tell sheet a line or a space that showed the S&P 500 and how far away it was from the 200-day moving average? So now, if we look at it right here, we wouldn't be getting out now.
Well, this is the daily chart.
I think it's a
Okay,
good idea
daily.
for your stock.
Okay.
Put your
All
stock
right,
up here. Yeah.
But if we had that, and it crossed here on, it looks like March something,
7th.
and Ard said that's the trigger.
Mhm.
I sell everything.
I think you got to have something, Kerry.
Huh?
I think you have to have something. You can't let folks,
Right.
suffer.
So
Yeah, right. All right.
so
Well,
okay.
I think it's if you're going to manage your own account, you can't rely on other people to do that. You've got to understand what you're doing, and one simple line will do that. In it,
That's
it's
what I'm
not going to
saying.
take 100,000 hours of your day to make
Right.
that happen.
So if on my chart I showed the S&P 500 and I showed how far off the 200 moving average it is, and then as Ard sees it's coming down and it's within 3%, if that's his point out, that tells him. If on
Okay.
the other hand, then when we get to March or wherever it comes back up, and he
But
says,
what if
You
it
know,
did this?
you
What
know,
if
what gets
it
tricky
did,
about that. Hold on. You know, what
what
gets
if it
tricky
did,
about that, Kerry,
this? What if
is
it did
most of the
this?
time you'd
What if
be
it
out
did
because,
this?
yeah.
You're
it
out,
did, but
okay?
it doesn't
You're out.
cross it.
Right, it's not crossing it. Right. So I mean, just use the 200.
That's what I just said.
Right.
Use the
Yeah.
200.
Hey,
Put up
hey,
Iron.
Mark,
Put
let me
up
show
a
my
stock. Put Iron. You'll see that it's basically under the 200 for most of its life. So you got to take them get an idea. Try one.
Mark, could we
IREN.
program that when it hits the 200 to sell it
No,
automatically?
I think
look
he's
at
asking on his brokerage account, can he program that in? No, I don't believe he can.
he can probably, I don't know, depending on what program you use, you might be able to set an alert, but
Yeah.
otherwise, on a daily chart, we go over this every single day in the morning. The SPY, the Qs, the Dow Jones, we go over it every single morning. We look at these charts.
Yeah,
Well,
he's gonna have
I
time.
think
He's
you're
gonna be
right.
around.
If you'd got out of Iran when it went under the 200 and then got back in, you'd be a very happy camper.
That's right.
Here,
And
Mark,
that's a good. I like that, because basically what you're doing is giving him a signal to say you shouldn't be in it, and now you should be in it.
Or this is an alert and you make your decision.
That's right. That's right. But
Hey,
right now we
Mark.
have no parachute.
No.
So
What do you
Okay.
mean what do you mean
I can do that real easy.
What do you mean you have no parachute?
meaning that he could go down 50% and he'll take a loss. And right now he has no stops. That's not good practice.
Well, and that's what I'm saying.
Yeah.
Use this line and you're out.
That's what I mean by parachute. That's
Okay.
what parachute means.
Well, now he does, because he knows.
Mark, can I show my screen real quick?
You tell by his personality, he won't go that way. I mean,
Also,
Hey,
I
Mark.
wanted to ask to see if Mark is talking about just to do S&P and apply that for all the stocks, or you want that to be done for every stock individually?
I think you do it just for the S&P 500 and that's your alert. And then you look at individual stocks and make a decision.
Oh, that's very helpful. Yeah, thank you.
Yeah, and I can have that up by Monday.
Hey, Art, I don't know if you see this on the newsletter that I send out Monday through Friday, but this gives every stock in Kerry's tell sheet and tells you what the 15-minute or 15-day trend is, the 62-day trend, and the 200-day trend. As you can see here, Apple is below its 200. ACLS below its 200, Adobe below its 200, AEHR. I mean, this is exactly telling you every morning when I send this out that where it's at, ARGX below the 15, below the 62, below the 200. From a long-term perspective, if I'm looking at, so let's say IREN here, it's above, is that right?
Yeah, that is
Above the
right.
200, above the 62. When I look at this, I go, okay, here's Mercy
Hmm.
Systems. It's below the 15. That tells me I need to pay attention. If it goes below the 62, for me, then you reduce it to your minimum holding, which is 1%, because it's heading south. If it goes below the 200, then in this case, you would be stopped out. So this is something I put on the newsletter every morning of Kerry's tell sheets of all of his stocks and his watch list stocks. So it gives you an idea where they're trending every day from a 15 period trader's mentality to an intermediate trend period to a 200-day, a Paul Tudor Jones approach. And so it can easy to guide through if you're using Kerry stocks as your 40 some odd stocks to hold in your portfolio. You can easily click through and look at them and go, okay, it's above the 200. I'm good. It's above the intermediate. I'm good. Trader, I need below the 15. I need to pay attention. I need to put that on my watch list. That's how this can be used to protect you from losing enormous amounts of money. And
Thank you.
I
I was seeing
recalculate
that,
it
but
every night.
this explanation is helpful. Thank you.
What's that?
I was saying I was seeing that, but I didn't know how to use it. But now you explain, and that's the good thing when you all are explaining all these, so we know
Yeah.
what they are.
It looks like I'm going to be producing a lot of videos this week.
Yeah, I see a question from Raymond. He says,
Yeah.
you have to, so to answer your question, you have to purchase shares. Once you purchase the shares and you own the shares, that's when you set up the stop loss. So every time, and I do lots of trades, every time I do a trade, as soon as I do it, I put in a stop loss because you never know when that thing will just dive on you. So that's a good practice overall.
Hey, guys,
I
if I
assume you
could,
can do it later. Am I right?
But are
You
you
do it any
trading
time.
or are you an investor on your stock? Okay. If I'm an investor, I'm not in and out of it. I'm trading. Okay.
I have it on both.
I'm,
when do you guys propose to getting back in? If we put a stop loss in and it drops down and in those we sell those shares automatically, what's the re-trigger period at that point? If like if there's a stock that goes down 10% and it automatically sells, do you then turn around and put a buy order back in for if it goes down and then goes back up? Because I feel like it's half of the equation. We've got the
What,
sell for when it's going down, but when do we buy back in?
well,
Michael, what's your
well,
time frame?
yeah.
A long term.
All right. So we're
Okay.
not trading.
So I'll give you an example. If you use that sheet I just showed you,
Yep.
my rule is intermediate trend. If it goes below the intermediate trend, I drop my position from a max of 8% to 1%. I always hold, if I have conviction and fundamentally believe in the company and I believe it's going to be significant, I'm just going to at least hold 1% of it. So if it drops below that intermediate trend line, I'm down to 1%. If it crosses above that intermediate trend line and supports there for at least 2, maybe 3 days,
Mhm.
then I start building my position back. Do I go full 8%? No. I just start adding, say, up until that point, I'm up now to a full allocation. That could be at 50 basis points, could be 100 basis points, it could be 200 basis points at a time. But that for me is my line in the sand. Mark, he has a different long-term approach. He may have a different one, and that's where you know that's the process of building your own investment process policy statement and putting that together.
See, and I think
Got
on
it.
I think on long term, I can share this again. At least in the morning, I know some people want to go long term on Berkshire Hathaway.
Don't do this in the
Okay.
afternoon, only in the morning. I'm just busting.
So we've been watching this, and I'm a long term shareholder of Berkshire, and I swing trade Berkshire too. Now, in a swing trade, I'd be out of this, okay? And if I wasn't such a long term holder, and my shares are way sub under $100, so this isn't going to get me to sell, okay? Because I don't think Berkshire Hathaway is going to go down to where my cost basis is. But you swing trade differently. But in a long term, we're watching this, and I know there's some people in the morning that are thinking about buying Berkshire B, okay? And so I'm going to go back a little further, and I'm going to show you something. This is the 200-day simple moving average. And this is what we talk about in the morning. You can see you've been in this a long time on Berkshire, okay? Came down, almost got it, didn't get out. Came down, bounced off the 200, didn't get out, okay? You got close here, didn't get out. Now we've got Berkshire coming down, and this is since Warren Buffett's shareholder meeting, okay? And they call it the Warren dip because he's not leaving the company, he's going to step down as the COO. But we came right down to the 200, and we've been watching this for a couple of days. Okay, the 200, it's bounced several times over the 200, on the 200. It's not just my indicator, it's everyone's indicator. All the logarithms, technicians know that the 200 is a good level of support, and it's a hard level of resistance to get over. So we came down 3 days. We haven't quite, we're starting to see come back up over the center line of the channel. We're going to see if we get down below the 200, but right now, this could be, it's not yet, a buy for somebody who might want to go long-term on Berkshire utilizing the 200-day moving average like Paul Tudor Jones. But the signals aren't there yet, but we've been watching it every morning, just like we watch the indices. If this will come down, and bounce off this, the 9 comes down, okay, this is a daily, we start seeing momentum and the oscillators come up, and this starts going up above the 9 and starts moving, that would be, if that happened, an excellent place to probably enter a long-term position on Berkshire Hathaway. Not yet. So this would be the same if this was SPY, or this was Irene, or this was any of the stocks Kerry talks about, in my opinion. Okay, I'm done. Back to you, Kerry.
Oh, no.
I-
That's not fair.
I'm out.
I asked one more question.
Yes,
Go
Michael.
ahead.
Do you guys have any input on some of the stocks on Start Engine? The stock's normally not tradable right now, but you can invest in. So they just launched Stripe. They have Perplexity on there. They have X.AI. And I guess the way they work is they're almost like private placements in a way, where Start Engine takes 20% of whatever the gains turn into, but then 80% go into a fund that they syndicate. And what are your take on some of those? I mean, there's no liquidity to it. It's a long-term play. But do you think some of those, based on where they are today and what that could turn into when they go public, could outperform what we're doing here?
I don't know
So
the answer to the question I'm going to ask, but I think that it would be very revealing what percentage of startups actually go public and become successful. I would guess it's below 25%.
Yeah.
That's a slot machine in at Las Vegas. I don't want to play it. I don't.
It's a good way to look at it, is gambling.
It is because you don't, no, before they go public, they don't share their financials with anybody.
Hmm.
So you don't, I, I lost half of what I had on the biotech thing. And if you back me up to the wall and say, how did that happen? It was emotional, and I did not know what I owned.
Hmm.
I did not know. And what you're describing, Michael, is exactly what happened. Um, I knew that CRISPR and Caribou and these people were going to put a needle in my arm and take the cancer out of my body, and everybody related to me, and it was going to be the salvation of the world. But I did not know what I owned. I did not know that they were working for universities, Harvard and UCLA, and they were going to turn around and sell this drug to Moderna or Eli Lilly and then collect a royalty the rest of their lives. I did not know that. I
Hmm.
did not know that the federal government was funding UCLA and Harvard. And this was me and you paying for risky research. And then when they did find the drug and sell it, then our insurance, which we pay for as well, would pay for it. No, that's a scam. And
Okay.
I don't want any part of that.
That's good.
That's it.
Great. Thank you.
And there are a lot of scams out there.
There sure are.
Yeah. And no, and again, uh, and this what I just described to you is what's going on with Harvard and UCLA and Columbia. The government is funding their research. I didn't understand that until I asked Samantha. When Trump initiated the we're cutting the funding to Harvard because of the students' behavior on campus, I went to Samantha and said, "What is this all about? How does this work there? How is Harvard related to Eli Lilly and the government?" And she gave me exactly how it works. The government, the pharmaceuticals in the 70s came to the government and said, "We cannot afford to fund the financing of finding new drugs. You need to take it over." And that's what happened.
Hmm.
And our tax dollars, and I understand that, hey, that's to everybody's benefit. But if that's the case, then when the drug comes out, it's free. If I
Yep.
funded it, the finding of it, it's free. But that's not how it works. We pay for the cure. Well, no, our insurance company does. Yeah, but we've been paying for years to the insurance company.
Yep.
No. So as long as you know it and you know how it works, but we didn't know that
I
until
think,
all the knowledge of the world was available to us. And if we
yeah.
knew how to ask the question, we can find the answer. Okay.
Thank you.
All right. I get a little carried away.
I, I'm seeing sometimes it gets frustrating when you get stomped out. If I put
Yeah.
stops in and I get stopped out, but most of the time when that happens, I'm happy because the stock actually goes down further. So a lot of
And
times
I
I
think I like your ideas, Paul and Mark, that if we just say, rather than dealing with every stock, let's just protect ourselves from disasters, and disasters happen when it crosses the 200-day, and then we can make a decision. So I'll put that on my chart this weekend. Okay, this is exhausting. Anybody else got anything they want to take care of? All right. Well, it's for me, this is one of the best weeks I've ever had in the stock market. And again, what I do when I watch my portfolio is see how much I'm up and down percentage wise. And then over on the side, I have a tracker that tracks stocks. And up at the top is the QQQs, the Dows, and the S&P. And I always look and say, how am I doing relative to the QQQs? If I'm up 1.3% and they're up 1%, well, I'm outperforming them by 30%. If, on the other hand, it's turned around, I'm underperforming them. Then I look at my stocks and say, why? What stocks are giving me the underperformance? I don't know on your, again, I use E-Trade. It tells me in a column, and I'm sure you can put this, what has this stock done over the last month? What has it done over the last 6 months? And what has it done over the last year? And so I look for trends. And the big trend is the past month. Is it moving up? Like AEHR has always shown a negative number, but now on a month, it's showing a positive number. And so I watch those to see, has this company made the turn? And that's just more information.
That sounds like Kerry's doing some swing trading.
No, I don't have time.
I know you just, when it makes the turn.
No, when it makes the turn, I say, hey, there's hope in the future. No, I don't have time to do swing
I
trading.
buy when it makes that turn.
You buy it when it makes, okay.
When it makes
there you
that
go.
turn.
When it makes the turn. And I guess that's what we'll look for from a portfolio standpoint. I'll enter, and on my tell sheet, every stock tells you how far away it is from its 50-week high. So that tells you if it's a depressed stock, and then you go over and look and see if it's made the turn.
On my Fidelity
I
account,
had-
I would just want to just on my Fidelity account, I have a watch list called Kerry's List. It
Oh,
lists all your stocks. And
okay.
on the watch list, it'll give you real-time analysis. So
Oh,
things like that taught me was Mark, like MACD turns, or
mhm.
it hits the 9-day moving average. It gives you indicators real time, so I can watch all your stocks. And it says I'm not getting into any of them until I see some indicators click. And then when
Okay.
I see an indicator click, I put the chart up and then make a decision. So many of your stocks that you have on there, I'm not in until I see, it's trending up or making that swing, to your point.
Does Fidelity provide you good charts?
Absolutely. But
E-Trade does not. It does not.
more importantly is like what I do is I have a big long watch list. So it has my favorite 100,
Right.
200 stocks, and then it has the stocks that I'm in, and then it has stocks that I want to get into. But these watch